the road club was looking at her. She hit the floor, next thing you know, shawty got low, 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 low. Everybody! Apple bottom jeans, boots with the fur. Oh, the road club was looking at her.
Hey, welcome to the closing beat, everybody. Happy Thursday. How you doing out there? All is good with you? Hope you're having a great day out there. It's good to be back. You know what I mean? Like, good to be back doing the live thing, and hopefully everything's going well, you know? There's no place like home. It's just a good feeling out there. Anyways, we're financial advisors here at Jazz Wealth, and I'm the captain now, so we're going to get started on all of this and see how it goes today. Hope you'll check us out at Jazz Wealth there, jazzwealth.com, actually. And if you'd like a free, kind of like a free numbers list of everything you could ever want to know for 2023, go to jazzwealth.com/2023, and Haley will actually, she'll mail it to you. Right? Email it to you, not mail. We don't do the snail mail thing anymore, but we'll get started now. And this is going to be short. You know what I mean? This is kind of going to be a short thing today. There's a lot to cover, don't get me wrong, but when you look at the stock market, you have, just a consistent uptrend. Like the momentum from the inflation numbers came along there. It's just going, just keep swimming. It's on and on and on and on, and all is good, right? Just why? What? Like, what's going on there? So today we had a new 52-week high in the markets there. Now, part of the rally today came from what they call the producer price index. The producer price index is, so remember we did the consumer price index yesterday, and the consumer price index is what we pay for stuff. How is our inflation going for the stuff we pay? Producer price index is how is their inflation going for the stuff that they buy and then make into stuff that we eventually buy, right? So pretty cool there. What's interesting is the spread between what their inflation is and our inflation is wide, right? It's actually the widest that it's ever been, and I'd like to take a look at that for a moment. Welcome, Dan, Giovanni, Kevin. What, are you not entertained? This is crazy, huh? Wildest spread ever. Here we go. So this is inflation versus the producer price inflation. So basically what you're looking at here, the blue is the producer price index, okay? That's what came out today. The black didn't update for some reason. It's actually 5, but I don't know why it says that. It's just 5. So the black is our consumer price. Think about it for a second from just like an economics level, like basic kind of, economics 101 level. It costs them less, or they're paying less inflation for the stuff that they buy and then make us physical things that we go buy. It's costing us less. However, the spread is the widest that it's ever been. Do you know that? On the downside, I should say. On the upside, of course, COVID took care of that. It's the widest that it's ever been. What can we learn from that? Like, is there something that we can tell investors, long-term investors, that that's a good thing or that's a bad thing? Well, think about it for a second. Does that have anything to do with profit margins or corporate profits, maybe? Remember, corporate profits are what drive the S&P, drive the markets forward, right? More growth equals more stock or increased stock price. So what we have now is a wide spread where we can suggest that the profit margins should be healthy, okay? Almost as healthy as they've ever been, really. So if you really look into this, you go, earnings season is starting next week. And we know that the costs have been lower for producers, and apparently we're still willing to go out there and buy the devil out of everything. So we should see good profit margins. We should not see companies that report large reductions in their profit margins. If that's the case, that stock's going to get hit. That's going to be a problem, right? So you can already look at it and see, like, because we know the data. So if there's a stock that says, profit margins, they're just, it's not quite my tempo, man. They're just not what it is. And it's going to fall apart. People are going to sell, okay? So little heads up there. Really cool thing that we can take a look at going into the earnings season. So that's the S&P new 52-week highs today. I'd like to point out real quick, the Russell 2000. Elon Musk would like this probably. Yeah, he might like this. Say, I want to play a game. What is today? The 420th day that the Russell 2000 has not hit a new 52-week high. Okay? We track all kinds of weird stuff here. We're just crazy here. Why not? You know, you learn stuff from it. 420 days since it has not hit a new 52-week high. That is the third longest time ever. Actually, we got to get into the 500s to start breaking records there, but third longest time ever that's happened there. Third longest period. But what do we know here in the short term? People must know that. People must know that the weakness has been, you know, at a level for too long. We see it, right? We see the rebalancing, kicking off that new rally, getting everybody excited about small caps. And pointed this out about a week and a half, 2 weeks ago, mid-June now, actually, the idea of that happening. And so that momentum begets more momentum. Same in the S&P. Momentum begets more momentum. And eventually that momentum gets to a point where what? FOMO. You yourself feel like you can't do anything more there, right? I got to get in. This is just it. We'll get tomorrow. After all, tomorrow's another day, but no, I got to do it today. I got to be in. Oh, wow. Now what do? You find yourself in a position where I shouldn't have bought that, man. I got, maybe I'd be in a little bit of trouble there. Now, from a stock perspective, when you look at this, gets harder and harder to justify these higher prices, doesn't it? So we use the data. We want to go back and see, is this a good time to be participating in everything? So I want to dive into that a little bit here. We talked about the market performance yesterday using our research site. So if you know, we went in here. You're familiar with this by now. We typed in the S&P. We said, well, how often does this happen? Or the NASDAQ, I'm sorry. How often does this happen? And what's the likelihood that the forward performance is going to be strong? Well, if you take a look around the markets here today, I want to take a different look at this. I want to try something different. We want to say over the last 6 months, which is basically year to date, right? This is pretty much, this is exactly, this is close to year to date as we can get, right? 6 months and a couple days there, right? And so look, if you're a long-term bullish investor, this is stuff dreams are made of, right? Because you have the biggest sectors moving us higher and everybody else just going, I don't know, not going to participate. So if you hover over here, you got tech, 35% there, communication services, 29%, sorry, and consumer discretionary, 24%. Let's try something. Tech is the leader. It's up 35%. I would like, this is totally off topic here, just for a second. Try this with me real quick. The tech sector, how often has it gained more than 30% in 6 months over the last, I'll do 20 years, doesn't matter. Let's just see. Is it odd? Is this something that happens? Not too bad, actually. This can happen. These are rolling searches, by the way, so there can be overlapping. But let's try something here. I want to go in here. I'm not interested in tomorrow. Let's do every week. Let's try this here. So we're going to say when it gains more than 30% in a 6-month period, any 6-month period, doesn't have to be the beginning of the year, just any 6-month period. The next week, okay, we're not usually investing for the week, but tends to be a little bit ho-hum. I don't know, not much going on. 50-50 shot of it being higher. The next 1 month, it's positive, but it's not so impressive. Oh, I gotcha. I see that there. So let's try something else here. I'm going to go 1 month, and I'm going to go 2 months. I just want to see something here. Are we on to something? This is the tech sector, which we need the tech sector to move us higher. Well, look at this. Okay, so in the month following a 30% gain, greater than 30%, right? It's okay. In the 2 months following, it's okay. Still bullish, right? But I wonder what's going on down here. We have, can I sort this? I'm going to sort by gains, losses here in the center column here. Okay, so we've got some big opportunities for pullbacks, but more importantly, I want to try something here. Let's look at all the gains. So if I say over the 1 month period here, we've got all these gains in here. Okay, cool. Lots of gains skewing our average. When did they occur? I see a lot of 2009s in there. I see a lot of COVID recovery numbers. Those are big numbers. We're not in that position, are we? We're in a completely different position right now. We are in an uptrending market that's not recovering from a financial crisis, 2009, not recovering from COVID, 2020. So what would happen if you backed out all these? Where's the first event that we can find that's outside of that? I'm still scrolling. I'm still scrolling. I'm still scrolling. We're going to find one here eventually. Look, all of them. All of this data is skewed by crisis-type recoveries. All the weakness, 2012, look at that. That's all weakness. What were we? We were in an uptrend there, right? So if we dissect the data a little bit, now we go, ooh, our best gains come from after crisis, calamity, panic and chaos and all that stuff. Well, do we have that now? No. Everything's just kind of going along like just, look at top of the ship, just hands out. I'm the king of the world, right? There's nothing going on. So this is how I win. This is how we do this, where we look and see, here's the data. No, do I want to commit a large sum of money right here? Wow, well, the odds are not too bad, but look at where all that happened. Let's look at these dates. What kind of momentum is it going to take to get this stock market to go nuts from here? And how do we justify that? So I believe I put it in the title or somewhere where I said, go ahead, justify how we have higher prices. What is it? If it's earnings, it's already priced in, right? Look at the value of the S&P versus the value of the companies that are reporting. It's already priced in. Okay. Is it inflation? Maybe a little bit. Is it lower interest rates? No, we don't have that, right? So really, really cool what's happening in the market, and I'm trying to use enough words and be unique enough to try to show you, like, what's going on here, right? I love it. All right, so let's keep going. I do want to point out bonds. The rally continues here, and if you are do you follow Commitment of Traders? Is that one of your things there? Commitment of Traders, people look at this and go, well, boy, that escalated quickly. This is crazy. You believe that this is the bottom, the ultimate bottom. If you look at the Commitment of Traders reports, those people are going nuts right now because it looks like people are gobbling up these discounts in bonds and short term as well. Well, in the last couple of days, you look like a hero, right? Because it really looks like a bottom. How often does anything fall so aggressively and recover all of it, just like that? They call it a V-shaped bottom. That doesn't happen all that often. Look, I could do this all day, but we're going to run on over to some stocks in the news. Get out of the way here. Delta Airlines, interesting. It was up over 2% on earnings, okay? This is a great sort of representation of everything I was just talking about. Here's a stock that's done really, really well. Then earnings come out and it goes up. What? We're clearly pricing in a very successful company that's going to retire $4 billion in debt. That's good news. Imagine paying off $4 billion in debt. It's pretty incredible. So anyways, we're up here. We gap up. All of a sudden, people go, I'm good. It's a huge profit. I'm happy with that. That turns out I'm fine. I can do that there, right? That's why the stock's lower there. Notice the trend and then the gap up, okay? Whenever there's a trend and a gap up, it entices people to take profits. If you had Delta, you might have felt the same way, right? Whereas I can't remember the ticker symbol today. Eric pointed one out to me, and it was like the first day of a move, and I was like, no, I'm not doing it, bud. Can't participate in that. There's nothing there. There's nothing enticing people to buy on that day. Anyways, Pepsi reporting earnings as well. Not bad. They did great there, and this one actually held the 2%. So both of them gapped up the same amount, Delta and Pepsi. Why did Pepsi hang on here? The earnings were basically the same. Everything as far as beating on earnings is fine there. Nobody reported anything as outlandish like Delta or Pepsi. It was just total normal earnings beat. It held because we're starting a new move, right? Whereas Delta, think about this. I mean, these are these little things that add that little extra return. Why? This was up 2%. But here, it's already up, like, what is that, 33%? Isn't that crazy? How you like them apples? All right, so really cool, something to kind of take a look at. Disney, in the news here today, dead stock, boring stock, very, very boring. In all honesty, I still have the stock that I had. I've been selling covered calls against it. I have a reminder in my phone for tomorrow to sell calls again. I want out of it. I want nothing to do with it just because it's dead money. I like, the parks and everything. But anyways, Disney comes out, says, Bob Iger, we like Bob Iger too. We're going to keep him around another 2 years. And Bob Iger says, if you do that, I might get rid of our TV, what do they call them? The TV division, not movies, TV assets that they have. It's not really core kind of thing what they do there. So maybe a good idea. I like that Bob Iger's doing that. Anyways, moving on, the Trade Desk. Ever heard of this company? You might want to get used to it. It has taken the place of Activision Blizzard, ATVI, in the NASDAQ 100. That'll take place next week, I believe. And Fastenal is kind of an interesting one to watch for industrial, commercial, residential construction and parts and things like that, materials. It's kind of fun to watch and see what they're doing because they get the orders from the people that are then going out and driving those other economic indicators that we follow. I didn't spend a lot of time on this because I was really wrapped on something I found interesting. They said, all in all, we're not seeing really any weakness besides, and I wrote it down because I don't want to mess this up, we see weakness in non-residential construction sales. What is that? For those of you that think the commercial market is falling apart or is going to fall apart, I see the doom and gloom videos. I know what you're looking at out there. Well, that adds a little credibility to your argument. Non-residential sales, they saw less sales. That is directly correlated to commercial construction. Now, that doesn't mean that existing buildings are going to collapse and fall apart. It means that the new commercial construction market, if you think it's soft, they agree with you. So very, very cool. What else? Any questions? I'll take your questions here and see what I can help you with. So let's go over here. Pop this out here. We'll go there. You don't get rid of your Disney XD. I like it. You thought the Qs were overbought. Yeah, exactly. Now, to be fair, an overbought stock or index, commodity, treasury, whatever, can remain overbought. That's where that fear of missing out, the FOMO, kicks in, because that's where you want to chase it. You know what I mean? You want something, you go get it, period. Unless it's overbought, right? Don't screw with it. It's it. I like it. What's next with NVIDIA? J-Dub says, I started typing J-Dub, actually, bud. You notice that? No, you can't see it. I start typing your name. People are willing to pay any and all prices for something that is astronomically expensive. I believe in AI too. I'm right there with you. But at this price, I don't know. I have a hard time with that one. That one is very difficult. And for some reason, I've hit the wrong button again. I do apologize for that. Hey. Well, it's actually your name. Can I do a video about borrowing against stocks? We have, right? We have done that. Also, but I might have been a wine and wealth class, so it might have only been for clients. Certainly something we can talk about. I'll be totally honest with you. Right now, it's expensive. Interest rates are higher, so it's more expensive to borrow against your portfolio. So I'm not really suggesting that to be a great idea at the moment. But yeah, we could do a video on that. Yeah. J-Dub sold some NVIDIA 490 calls. Now you're worried? That's better than Eric. I've been teaching Eric how to roll and play defense on NVIDIA. He's learning a ton with options. He thinks he has a losing position because he's got the 415 calls. He's short the 415 calls. I'm like, no, you haven't lost yet. He actually, you hope you get assigned, but he's not feeling the same way. Tom says, how about adding to the SMH? You've got stock making new highs, all the technical indicators generally hinting at overbought or extended. In this case, I'd agree with that. And if you've ever if you ever look at the SMH, I've never done this with individual stocks, but with the SMH in particular, price versus the 200-day moving average is a really accurate indicator for this one. And right now it would say, if you did buy it, you would want to have a really tight leash on it. Say, maybe don't want to go all in on that one. But other than that, I don't have no problem with it. Oh, 3M, that's right. Yeah, it's been a while, huh? It hasn't really done a whole lot there. 146. Unfortunately, it has been dead money, so my opinion doesn't really matter because it has shown that it's dead money there. That's unfortunate because it's so far. If you own it at 146, you know, do you want to use it as maybe a little tax loss harvesting at the end of the year, or later at the end of the year before you do that? Maybe in November, sell a December call against it to get a little something extra out of it. But for the moment, I don't have a good answer for that one, actually. Yeah. How can you spot a pump and dump? Well, can you really spot one? I would say, hindsight is always 20/20. You can do that, but typically that's a penny stock thing there. You won't see that a whole lot in the old school traditional pump and dump fashion. You won't see that on normal stocks. They're too thick. Tom says, CPI, PPI, I still think the Fed raises 2 more times. I'm going to go 1 time. This year, that they raise 1 time this year, and then I think that's it. I don't think you got 2 in there. Now, big alert, right? Think about this. Inflation, if it doesn't grow next report, right, we're fine. If inflation grows 0.1%, 0.2%, 0.3%, whatever, if it grows over 0.0%, then the headline number is going to go up, right? So put that in your head because you're going to see it on TV. They're going to skew with the numbers a little bit. It will go up. That's because June, right? That was a big month. That was like 1.6% month over month. That goes away. So unless we're flat and have no inflation in the next report, we're actually going to see the headline number go up. It's not a bad thing. It's just the way the model is. It's 12 months. Yeah. Is Eric rolling in Video Weekly? No. He's out to August now. He has had to roll, but he's out to August now. Yeah. He'll be fine though. Like, I mean, now with the help of old Dustin here, now his average cost, he's still behind. His average cost is $448 and change or something. But he's at a point now where if he gets assigned, which he won't, but if he gets signed, he could sell a put and cover up the spread there. So I was trying to explain that to him today. So he's doing great, or well, he will be doing great. So much so, I was so confident. I said, dude, if you get assigned, or if at any point you get nervous, I'll just take your trade. I'll take over, right? But I get the profit. Hey, you've been watching the videos for years now. Made a huge, oh man, that's awesome. I love that, Robert. Love to set up a call, tell you how one day. You're more than welcome to do that. Yeah. We don't have like fancy people that answer the phones here. So, we just talk. It's okay. I love it. I don't follow Bitcoin or crypto at all, so I can't help you there. Yeah. 461 after hours. I see it. Yeah, he's not done yet. But realistically, if you're short a stock and you're wrong, especially using options, don't you want it to go away, like rip off real quick? Yeah, what you don't want is to be short something using options and find this. Oh, you could be stuck in that for a while. Anybody that's short in Apple, there's nothing extended, there's nothing overbought. I mean, it's overbought, but there's just nothing that says this is getting too far too fast. NVIDIA is headed that way, it looks like. So, we'll see. And last question there about Alaska. I won't be flying there. I would love to visit there. I was there in 1994, actually, was the last time I was there. But I will not be taking the Redbird up there. That's just not for me. All right, are we still showing the thing from yesterday? It's different now. It's different now. You guys getting paid, right? You getting paid, right? Good. All right. All right, I will wrap it up there. You guys enjoy the rest of your day, and we'll see you tomorrow there. Hasta la vista, baby.